We can talk about how crypto should be taxed all day long, but if we can't get the data to do it, how are we going to enforce that? How do you expect taxpayers to reasonably report that? So we really need the two to go hand in hand, good regulation and guidelines on how data is reported, and also the laws about how they should be taxed.
I'm really excited about our guest today. We have in the room today Ben Weber, who is the manager of crypto analytics at CryptoTaxAudit. And Ben is going to talk about how you do gain calculation.
I like to think about it as we're auditing the IRS here. So we have some very good analysts, some with backgrounds in forensic accounting, and we just go through and we analyze what they've done with the data that we provided
If you've
of these
ever
calculations.
tried to pour all your transactions into one of these online services to figure out how much your taxes are at the beginning of the year, you've probably experienced a lot of headaches. This is Ben's bread and butter. He's got a whole team of people that work on it. You're going to learn a lot of information today. I hope you find it interesting. Please stay tuned. And if you enjoy the show, please hit the like, subscribe, follow, or whatever is appropriate on the social media platform you're on. Ben, you did these benchmarks and you had to be asking yourself a lot of questions as you looked at this data. What are some of your reactions and how you interpreted the reason why there are such divergent answers? Welcome to the show.
Thanks for having me, Clinton. I'm excited to be here and to talk about crypto taxes and the issues, that we face in this industry.
Well, hey, so Ben started working for me in 2019, and at the end of the year, I challenged him to take over our crypto analytics group and actually start it. We brought in another person, and Ben started this, and it was the first year was a wild ride. We knew a lot of stuff, and it was challenging for us to put our hands around it, but we hired some amazing people on your team, and within 6 months we were just doing incredible work. And as far as I can see, and I talk to everybody in the industry, you lead the best team in the entire industry in terms of gain calculation because it's personalized. And this is why people come to us after they've used other services, especially high net worth traders, high volume traders, because there's nothing your team can't do, Ben.
Yeah, well, when you put me in this position, you told me this was going to be easy, and I'd be back to doing tax returns in 6 months. Well, this was one of the biggest challenges I've faced in my career. Starting a team, learning about cryptos, learning how to account for cryptos and do these calculations, how to get accurate results, and really how to build out a process to do this correctly and importantly in a way that we can defend these in front of the IRS.
It was. You did an amazing job. Let's start about your background. You got your degree in business, I think, and you went to work for BDO. Tell me more about that.
Yeah, I majored in accounting, and I went to work for BDO for about a little over 2 years in their tax department. I was focused mostly on businesses, but I in BDO you get to touch everything. So I had some individuals, um, and then also towards the end I was almost focused on solely foreign reporting actually. And at BDO you get a lot of experience. The way they have it set up, you get to work on a lot of different teams. You learn from a lot of different people. So just the experience I gained there was invaluable to where I am today.
It really shows. Hey, let me jump ahead for our listeners. I'm going to show them some interesting work that your team did about 2 years ago. Well, actually, about a year ago. His team does gain calculation differently. Of course, we use one of the online tools. We actually do several of them, but it's more than just plugging the numbers in, right, Ben? I mean, it's really understanding what you're seeing, how to make choices to reconcile the gain. Can you talk about that whole process for the person maybe who's uninitiated?
Yeah. So I mean, it's highly important to do your crypto gains calculations correctly. If you have issues in one year, those are only going to grow in the following years. So it's important to do it correctly each year. Now, a lot of these crypto tax calculating softwares would have you believe that it's quick and easy. Upload the data, press a button, voila, you have the results. Well, in my experience, there's nothing quick and easy about this. It's complex. On my team, it takes me about 6 months to a year to train an analyst to do this correctly. There's a lot of data that goes into these calculations, whether it's from CSV, transaction history data, API keys from exchanges, or API keys from blockchains. Sometimes the software won't even have support for a blockchain, so you have to figure out another way to get the data. You import the data, and this is a challenging part that takes practice. And if you import the data incorrectly, you're going to have errors. So on our team, we review each calculation to make sure things have been imported correctly. Our process that we've built out over the past about 2.5 years, 3 years, has really come from my past experience in public accounting. And we start with the analyst who prepares the calculation, they import the data. A part of that is we document the process. So, why did we classify transactions the way we did? This is important for IRS audits. If you get audited and you can't remember why you classified a transaction a certain way, or you don't have the support data for why it's classified a certain way, the IRS is going to go their own path and go with their own results. And this has actually come through in audits that we've had. I found that when we provide, this documentation to the IRS, they're more willing to accept the results than without it. So once we document everything, it goes through a review process, a detailed review. This would be with a senior analyst. They'll make sure everything's correct. And finally, it'll go through a high-level review with a manager, usually me, just to sign off on everything and make sure that there's no loose ends.
We're annotating everything that's happening, and we have peer review and manager review. So sometimes double reviews on people's audits. And you guys are all specialists and trained in this field. So I think that's one of the things that makes it incredible. Let me jump right ahead for everyone. And thank you for that description, Ben. You did a benchmark. We picked 3 clients. You can, we'll see this on the screen here. 3 clients who were CFI clients. We call them CFI. That means they had no DeFi. Everything was done on centralized exchanges. And these were clients that they're a little bit wealthier, so the numbers are a little bit larger than everybody else's. But I think in this case, we're looking at somebody who had about 300 transactions. He had high dollar amounts, but it's just like anybody else who might have done 300 transactions. What we did was we plugged these same numbers in. Your staff used the same disciplined approach. And what shocked us when we did this was that all the numbers came out really different. We thought before that these services would all come up with pretty close to the same amount of answers if you gave them the same data and did the same reconciliation process, but it just shocked us. On the left, we have the major gain analytic engines, online services, and this is sorted by total proceeds. Now, we have the total transactions, total proceeds, and total gain. So what I think jumped out to you and I the most was just the shock in the total number of transactions. Remember, everybody got the same amount of records from the exchanges. There ought to be some consensus on what that is. But in fact, it's quite divergent. We go from a low up here at Bitcoin.tax at 170 transactions versus legible tax, which has 26,000 transactions. I mean, are we looking at the same data? The numbers are all over the map. About half of them are below 1,000 transactions, and there's reasons for those to vary. But we have like Node 40's got 11,000 transactions, and I should note that at the time of this benchmark, a lot of these companies would charge by the number of transactions. These outrageously high transactions also translate into really high fees that they want to charge. But we also see the total proceeds, which we range from 1.1, almost 1.2 million, all the way up to 4.4 million. Now, proceeds is just like, what is the value of all the amounts that were sold? Just not really worrying about gain or how much profit you made on, but it was just the value of what was sold. But there's a spread here of 4-fold. So Ben, you did these benchmarks and you had to be asking yourself a lot of questions as you looked at this data. What are some of your reactions and how you interpreted the reason why there are such divergent answers?
Yeah, this is pretty shocking. And it goes to show that you really have to be due diligent when you're doing your crypto calculations and understand what is going on. You have to understand how the software is working and how that affects the tax results for your tax jurisdiction. There's a lot of factors that go into these softwares. Here, what I think happened is we were using an API key, and at the time of the benchmark, one of the exchanges updated their API key, and all of these softwares have to maintain a connection with the API key, and they have to maintain that. Well, maintaining these connections costs them money and time, so I don't know how often these softwares will do it. So I think the issue here is with updating the API keys to connect to the exchange to pull the data. You're really putting your tax results into the hands of these softwares. And that could mean that you're overpaying tax, underpaying tax. This is why it's important to, really understand what you're doing or hire a professional who understands. Sometimes when it comes to blockchains, these softwares will pull in different data in different ways. For example, with Ethereum network, some softwares might not pull in the ERC 720 tokens, the NFTs. They might only be pulling in the ERC 20 tokens, or they might just be pulling in the transactions and not even classifying them. So you really have to take the time to go through and understand what the software is doing and how they're breaking down the transactions, how they're classifying the transactions, and also understanding how those transactions in the software, when they're classified, affect the final results. How does it show up on the end reports? These are all things that you have to think about and analyze once you're done with the calculation. Really, the last step is look at the reports. Do the gains make sense? Do the total proceeds make sense? And it's, imperative that you do this. Otherwise, you're going to report something that could be wrong.
Well, that's really just a mountain of good information there, Ben. A lot of people I talk to, they tell me, oh, I use CoinPanda, or I use Coinly. And they say, they felt like they used it 1 year and they kind of understood what it was. The number that came out was maybe something they believed, and they think it's wonderful. And that basis for why they thought that service was wonderful has nothing to do with accuracy. And in fact, if you go to all these websites, none of them guarantee their accuracy. In fact, if you go to their websites, it says their terms and conditions, it disavows any accuracy. There's no guarantee at all. You take it at your own risk. And that's interesting because I was just talking to a company yesterday that does gain calculation, and they used Coinly. And as you see here, the total proceeds was 4.2 million. Pretty high number, was second highest. When they got down to the total gain, we were able to get them down to a relatively low number. Is that good? Is that bad? Which one of these is most accurate? It's hard to say. But some of these services, like this one up here, TaxBit, had 9,000 transactions, and the person had $500,000 worth of gain. And this benchmark was fairly vanilla. These were major centralized exchanges, not a whole lot of transactions from the customer's point of view. You really can't just assume that these products are consistent. And we had done this benchmark before, if I remember, Ben. These numbers vary from the same services, even over a period of months. I'm going to flip over to the DeFi benchmark. Now, you had picked one of our clients to do a DeFi benchmark. Now, DeFi is tougher for a lot of reasons, but I think one of the shocking things was just when we look at this result, is that the number of transactions that are read off the benchmark. Now, remember, with DeFi, right, we're reading this off the blockchain. Everybody's reading the same blockchain. But one service is coming up with a little over 3,000 transactions. Another service is close to 10,000. Are they all reading the same blockchains? And the number's all over the map. Why is that? And then secondly, just totaling up the total proceeds and rewards, that's basically just the positive income that's discovered on the blockchain. As accurate as the blockchain is, these people can't agree on what that is. It's ranging from 88 million to 323 million in this scenario. This is big, especially if you're going to be paying taxes. How do we understand this? Why do these services struggle with just the basic challenge of reading a blockchain like this, Ben?
Well, they struggle because it's an immense challenge. I totally sympathize with them. This is not an easy thing to do. There are dozens of blockchains out there. On each blockchain, there's, hundreds of protocols. And these protocols and blockchains are created by people who don't have a tax or necessarily accounting background. they're most likely coders or programmers who are creating this. So the data on the blockchain is hard to understand. It's hard to interpret. There's different ways to interpret it. Depending even on which tax jurisdiction you're in, is going to determine how you report these transactions. An amazing thing about DeFi is it opens up a lot of complex investment tools that aren't generally open to the general public. They're generally reserved for the wealthy or rich. And now anybody with a smartphone, a computer can go on and take out a loan or put their cryptos in a liquidity pool to earn rewards, do staking. So there's a lot of complex things going on, and it's not reported in a way that's easy to understand. So these services are trying to pull in data and interpret it, and that's challenging. And they have several blockchains to work with. A lot of these services might just claim, maybe they support 10 blockchains, but they're only importing the some of the data. They're missing the other piece, and that causes almost more problems because if you just have half of the puzzle, you're not going to get to the correct tax results.
Well, and a lot of these blockchains have, there's smart contracts in there. So inside the record, there's a smart contract, which could be doing a variety of different things.
Correct. And I know some of these services are actually, it's really interesting. They're trying to dive into the smart contract to determine how to account for these. They're not just looking at, Etherscan at a base level and pulling in the transactions through an API key. They're actually digging into the smart contracts and the protocols. Now, the challenge here is, 10, 20, 30 protocols might come out this year or more, and then they might not be used. And then next year, more, another 10, 30, 100 protocols come out. So this is an immense challenge. And it's hard to keep up with the constant change.
Tell me, when people come to you with complex challenges, can you tell us about some of the experiences and stories that you've had actually doing people's gain calculation?
Yeah, so I don't think we shy away from anything or anybody. Whatever the challenge is, we'll try to find a solution, get a reasonable answer that the taxpayer is comfortable with reporting and that's fair. So, especially in DeFi and NFTs, we use many tools. We use a lot of crypto tax calculating softwares, all of the major ones out there we'll use. We also use third parties to pull data directly from the blockchain in a manner that we can import that into the software. Essentially, we are able to classify these transactions before we import it into the software so that it's reported in a way that we need to report it for US tax under US tax laws. So with one client he had about 17,000 transactions. Most of these were on Ethereum, but he was using, all of the EVMs. And just to import this into, one of the crypto tax calculators that we were looking at earlier would be an immense challenge to go through and verify that they classified everything correctly. So by using one of these third parties to get the data in a format and an understandable manner really helped us to get to a correct answer or a more reasonable answer. Typically, with 18,000 transactions on DeFi, you could be spending 100 hours on it. By using, other tools at our disposal, we were able to bring that down to about 50 hours. And when we looked at his past year tax returns, we were also able to lower his income and get him a small refund. So, that's always nice to help clients get to a better place. It doesn't always work out. Sometimes you find more income than what was previously reported, and that's not a fun conversation. But so I can't guarantee that I'll get you a refund or smaller income, but I can guarantee that with our processes that these are going to be defensible in front of the IRS. I'm comfortable with giving these to the IRS in an audit, and I'm confident in my team.
We have all sorts of people come to us. I know we've had a guy with 5 million transactions. One person came in with 75 wallets. Your team is fearless and they get it done in a way that's audible. And we can defend it and audit, and we have the records to prove and show to the IRS. One of the first things we do when someone comes to us and they're being audited by the IRS is we have Ben's team. You guys go through and do a recalculation of their gain. Doesn't matter who did it, and we know that we can do it better. Usually results in less tax, unless they grossly forgot to report certain things. We had one client with 100,000 transactions that we did the gain calculation for over 3 years under an audit, and then the IRS took their own swing at their own calculation, and they came up with a number. In that case, it was 1.5 million. We have another case where it's $2 million more taxable income that they wanted to hit the client on. You then took the IRS's results and just dissected them. Tell us about that whole process.
Yeah. So I like to think about it as we're auditing the IRS here.
That's
So
good.
we have some very good analysts, some with backgrounds in forensic accounting, and we just go through and we analyze what they've done with the data that we provided them. And what I found is that they're struggling with the fundamentals of these calculations. I mean, just importing the data correctly and classifying transactions correctly. And it's just kind of wild that they're coming up with these numbers, and expecting somebody to pay them when that's not their fair share of income. It's way less than that. And so we really go through and document every transaction, where there's an error, and we show why that's incorrect. Then we present it to the IRS.
Yes, we had a call, I think, last week with the IRS. We presented them some information. Well, we gave it to them like the month before, and they digested it. They finally said, well, they conceded that we had totally discredited 80% of what the IRS had come up with in their audit. That's very compelling. It is the key to defense in an IRS audit. When an audit starts, a lot of people think, well, I'll just get a lawyer to defend me. Well, lawyers know nothing about gain calculation. They know procedure, but they won't go into the numbers. They just take what the client put forward. Whereas what your team has done is you come out of the gates aggressively swinging that, what the customer originally presented was too high. We're coming in for a lower number. And then we put the IRS back on their heels. They do a calculation. You shoot holes in theirs. It was just incredible. I looked at that document. It was like 70 pages of all the mistakes that the IRS made. And when we can do that, it turns the table on the IRS. And all of a sudden, if we have to go to court, the judge doesn't believe the IRS's numbers because we shot holes into it. So that is a tremendous service that you have. It's incredible talent. What are some of the challenges, Ben, that you're looking at the industry in terms of rules and regulations and other things are evolving that are making it that present itself in gain calculation for this coming year?
Yeah, absolutely. First, I really just hope we do get good regulation that's reasonable, that's going to protect investors, crypto investors, both from bad actors and from the IRS. And one of the biggest challenges I see is really just this getting the data in an understandable manner where we can make financial sense of it. As I mentioned before, blockchains, there's dozens of them that are being created, and it's just going every which direction in terms of reporting and recording the transactions on the blockchain. I think good regulation would include guidelines on how blockchains should report transactions. And this will be a win-win for everybody. This will help taxpayers report their income in good faith, and it will help regulators enforce these laws that they create. We can talk about how crypto should be taxed all day long, but if we can't get the data to do it, how are we going to enforce that? How do you expect taxpayers to reasonably report that? So we really need the two to go hand in hand, good regulation and guidelines on how data is reported, and also the laws about how they should be taxed.
That is so true. And one of the things I think that's making it harder for people is to do gain calculation, you have to pretty much bring in all the transactions that you've engaged in from the beginning of time. Wasn't so bad back in 2018 when people only had a couple years of trading, but some people now have, 8 years of trading history. And a lot of these exchanges don't exist anymore. So we have a constant erosion and we have a prolongation of the amount of data that you're having to deal with to do gain calculations. There's lots more holes over time. It just becomes challenging. If we continue to have this approach to calculating the gain and paying taxes on it, come 5 years from now, it'll be almost untenable unless it's improved. Don't you think?
Yeah, not to mention the cost. The more complicated it gets, the more people are going to have to pay. especially with this bear market, people are struggling. They can't pay the cost to get this done correctly. And that just prolongs the problem. They might put it off or they might do it themselves and it might not be, up to standards. And this just causes more issues down the line, whether it's from inaccurate results or fear of reporting your crypto income.
One of the other things that's happening that you and I've become recently aware of is that these gain calculation services, I mean, we're recording this here in August of 2023. A lot of these gain calculation services had a very tough year because they're doing gain calculation for the year 2022, a down year, and a lot of people didn't trade as aggressively as prior years. So a lot of people didn't do gain calculation, or they did it on far less transactions, all of it resulting in less income for these gain calculation services. They have less money to pay for the continual updating of the APIs and new protocols that are out there, and it's becoming increasingly tougher and tougher. And in the retail market, where most individuals are at, people make a decision on which service to go to on price. They're very price sensitive. People say, one service offers it for $50, another service offers it for $300. You go with the $50 service, and the $50 service isn't making money. The $300 service is not getting enough clients, and both services are failing. When you look in the commercial space, and you and I have looked at certain commercial customers, they're charging in the neighborhood of $1,000 or to $2,000 a month. So you're into the $12,000 to $24,000 a year just for the same sort of services that we're seeing for $100 in the retail space. In the commercial space, it's not nearly as complex as the retail customers with DeFi and there are all sorts of blockchains that nobody else is touching. So, I think there's going to be a real shakeout next year. Some of these services will not have invested the money that people think they would have invested to keep their apps up to date. And that puts everybody at risk with, not necessarily having gain calculation numbers that they can trust or would want to pay taxes on.
Yeah, it's a problem. And my recommendation is do the best you can do. If you're uncomfortable, get a second pair of eyes on it or hire a professional who's specialized in this area. It might be costly, but it also might save you money down the line. If you get into an audit situation, that's going to add stress to your life. Not to mention if you have to owe more later, that's going to add further complications. So this is kicking it down the road is not the answer. You have to address this now. Try the best you can. Report something that you're comfortable with. And if you're not comfortable doing that, find somebody who can do it for you.
That's good advice. I think the big thing is don't ignore the problem. Don't put your head in the sand and pretend you didn't make any money and not report it on your tax return, because the IRS is getting very, very good at figuring out who is significantly underreporting and who isn't. Hey, Ben, it has been super exciting to talk to you. And if I just say that if anyone has a complex crypto gain calculation, would like to have someone else do it, contact our office, set up a consultation with our customer service, and they can talk you through the process. If you sign up to have us do your gain calculation and or your tax return as well, if it's a gain calculation, Ben and his team are eventually going to process it, and you're going to have the confidence of knowing that multiple pairs of eyes have been looking at it to make sure that this is as accurate a number as that can be calculated. So I just, am super excited, Ben, that you're working for us and you're doing great work for customers. And we can see it in the Trustpilot reviews, how ecstatic they are about the work you're doing. Thank you.
Well, thank you for having me, Clinton. It's a pleasure talking. And for those of you out there who need help, come to us. We'll find a solution for you. There's a lot of different things we can do. Even if you're on a budget, we'll find something that fits your needs.
And that's why we are the place that people go to when they've exhausted their other services. We are the best at CryptoTaxAudit. Thank you very much, Ben. If you enjoyed this video, please hit like, subscribe, tell your friends, and I appreciate it and look forward to talking to you again. Have a great day. And remember, taxes are sexy.
Welcome to the Clinton Donnelly Show, where we explore how taxation and regulations of cryptocurrencies affect your daily life as an investor. Clinton has a law degree in international financial regulation. He is an enrolled agent and certified as a cryptocurrency anti-financial crime specialist. He has clients in 71 countries. He is one of the top experts in crypto taxation in the US. This show is sponsored by CryptoTaxAudit.com, the income tax experts for US crypto investors. Are you frustrated with using online crypto tax services to calculate capital gains? Are you a high-frequency trader, DeFi, NFT, play-to-earn, or whale investor? Nothing is too complicated for the experts at CryptoTaxAudit.com. Are you frustrated that your accountant doesn't understand crypto taxes? Crypto Tax Audit uses a proven, bulletproof crypto tax return methodology to prepare a tax return that doesn't attract the attention of the IRS. Crypto Tax Audit also offers an exclusive audit defense membership service. It's like car insurance for your tax return. If your return gets selected for an audit of crypto reporting, they will defend you at no additional charge for the entire life of the audit. No one offers anything like audit defense membership. Go to CryptoTaxAudit.com to learn more and schedule a private tax consultation now. The opinions expressed in this show are not legal advice. Tax and regulations are complicated. Your situation is unique, so you should always consult a tax professional.